There we go. All right. Good morning, everybody. Good morning, and welcome. Thank you all for joining us today for what I believe is going to be one of the most important conversations happening in EB-5 space right now. My name is Claudia Ortega. I'll be your moderator for today's discussion. I represent EB-5 Lending Alliance, and where we focus on structuring EB-5 investments with a strong emphasis on immigration, success first, and capital preservation second. Today's topic is EB-5 capital stack, senior loan risk allocation, and investor protection. I'd like to take a moment and welcome our two panelists. We have Mr. Divish Kishore. Let me begin by introducing our first panelist, Divish Kishore. He's the managing attorney and founder of Flagship Law with over 12 years of experience in U.S. immigration law across both New York and New Hampshire. What makes Divish's practice particularly valuable is his ability to bridge the gap between legal strategy and real-world execution. He has advised both large multinational clients and individual families navigating complex immigration pathways, including EB-5. His approach is not just about filing petitions, but it's also about structuring cases in a way that align legal strength with practical success. Divish, it's our pleasure to have you with us today. Thank you so much.
Thank you for having me.
Thank you. And we have Mr. Mark Carmen joining us, and he is a very highly respected developer in the luxury hospitality space. Mark is the founder of the Auberge Resort Collection, a brand he established in 1998, known globally for creating intimate, architectural, distinctive, and locally inspired luxury properties. Throughout his career, he's been behind iconic developments such as Auberge du Soleil. Please correct me if I'm pronouncing something incorrectly. Calistoga Ranch, Solage, Calistoga, and Hotel Jerome. He now serves as the chairman of Private Label Collection, where he continues to focus on high-end experience-driven developments, including the Waldorf Astoria Texas Hill Country project. Mark brings us a very deep understanding of how to design, position, and execute projects that are not only financially viable, but enduring in value. Mark, thank you so much for being with us today.
My pleasure.
Thank you. So today we're going to explore three key areas. Number one is how EB-5 capital fits within the capital stack, how risk is allocated, and what investors should look for to protect both immigration and outcome of capital. So let's get started here. We'll start with Divish. Divish, from a legal standpoint, what is the investment structure as important as the immigration petition itself?
Well, the way I would put it is that an EB-5 investor is not just filing an immigration benefit petition and an application, right? They're also entering a binding legal and economic relationship with, particularly when they go the regional center route. So they need to have an understanding, deep understanding of both. And in my experience, EB-5 investors are often very focused, rightly so, on the petition requirements. Is the petition answering whether the investor qualifies for the classification that they're seeking? And is the petition doing it in a way that the process flows smoothly? But the structure is important because it answers a very important question. What is the investor stepping into on the day that they make the investment? Those are different questions. I like to advise my clients to treat them very separately from each other. Because even the strongest EB-5 petition is not going to fix a weak investment structure if it doesn't work.
So it's, we can very clearly say that they're very strongly connected, right? Both sides need to be balanced for it to be successful.
Correct. So when you make an EB-5 investment, before you file the petition, before you even get close to filing the petition, as an investor, I think you need to think about essentially diligencing what the eligibility requirements are, and then seeing whether the underlying deal really gets you to the point of meeting those requirements, not only in the short term for the conditional green card, but also in the long term when you request a removal of conditions on your green card.
Very well. Now, how would you say that a senior secured loan structure can impact the investor risk compared to equity?
I think it can be a meaningful protective feature in any investment, not only EB-5 investments, but it's certainly not a substitute for diligence, right? So I would say avoid treating the word loan as uh, a synonym for safety. The documents and the collateral package are what need to be tested. And you, as the investor, it's unfortunately your responsibility to have to go through them to the level that you understand it. So priority in repayment can matter, um, particularly in scenarios where, let's say, a project underperforms, or where security interests can create additional rights and remedies, or even in a scenario where the loan structure may impact the maturity and the repayment mechanics of your investment. But none of that makes your investment risk free. By its
Right.
very nature, an EB-5 investment has to be open to risk and open to the risks of the market conditions in which it's operating. And so investors still face the project risk, the market risk, the execution risk, and the immigration risk. And so the secured loan structure, I think, needs to be viewed and reviewed carefully, but needs to be balanced against both the commercial and the immigration consequences of that structure.
I think a lot of times when we speak to investors, they want you to say that, hey, this is secure, this is guarantee. And I think there's a big misconception between what is the meaning of the word secured, right? And when we're talking about the investment. So what would you say is the biggest legal mistake made when selecting a project when you don't understand the terminology?
Well, um, and I think that this is where our role as immigration attorneys comes in, because even if we're not really advising the client on or the investor on the investment itself, I think it's our responsibility to kind of form a framework around our clients, either within our organization or through colleagues, to enable them to understand the meaning of the security package that they're buying into, right? So, what is the collateral? What does the priority really mean? What are the inter-creditor agreements that might be at play? And what is the enforceability behind all of that? So I think that the biggest mistake that investors end up making in a scenario like this is they confuse a compelling story with a well-protected transaction. So I think that it's really important to identify the project that is going beyond really just telling you a story, but is actually able to document it. At the end of the day, it's all about the PPM, and it's always listed in the PPM.
Hmm. How what would you say are the three main things that you ask your investors to look at when they're evaluating a PPM?
Well, I would say number one, they should be taking timing very, very seriously, right? Not only when the investment is made, but also what does the exit mechanism look like? And what happens in a scenario where a project doesn't perform as it was originally intended to or planned to have performed? What that means is look to what is the project saying it intends to deliver. Um, Not only on the day that the project is planned to be executed, but 3 years, 4 years, 5 years in the future. Um, and particularly in the context of projects that are impacted by real estate conditions in this economy. You need to also understand what is the driving factor behind the project really choosing to put the EB-5 investor in a priority position. Is it just the market forces of the day? And if so, is the project committed to continuing to deliver that? Thirdly, also consider the fact that at the end of the day, I have a lot of clients who approach it this way, right? They want to approach it with an entrepreneurial mindset, and I completely respect that. And that's good
Hmm.
in its own place. But at the end of the day, you need to realize that the biggest benefit of the EB-5 investment is the EB-5, right? It's the visa. So even in a scenario where the project is perhaps giving you some level of security, you need to realize that the EB-5 investment by its nature is always a risk um, subject investment. And so you're kind of buying into a scenario where you might have to be prepared to understand what's going to change for you in the future. And essentially, you just need to continuously do your diligence and remain in contact with the regional center that you made the investment in.
Mhm. I can really appreciate the way you're describing that, because I think that's one of the challenges when speaking to investors, is understanding that everything in an EB-5 project has to endure some type of risk, right? And it's not necessarily about the return, it's about the EB-5,
Correct.
right?
And I
The
think that
process.
the best outcome is usually, of course, for investors driven by how quickly can we file? How quickly can I get into the investment? How quickly can I make sure that I get my green card in my hand? Which is great, but timing matters, and timing alone can be viewed, I think, in my view, as a strategy.
Mhm. Now, one more question now that we're discussing timing is, what's the current grandfathering window? Like, what's happening with that? That's a big conversation piece with a lot of investors.
Yeah, and I've focused on that a lot with investors and with clients and potential clients and with regional centers and in my scholarly research. But I think what needs to happen is that there needs to be an examination from both the legal and the protection side of things, right? So what's happening right now is that essentially any EB-5 petition that's filed before the 26th of September 2026 is going to be grandfathered into the way things stand right now. And for the moment, I think we're in a really good place in terms of having clarity as far as how EB-5 petitions should be adjudicated. And the reason I'm saying that that's the case for the moment is because there's so much flux in the administrative environment right now and in the legislative environment that that might not remain the case for very long. What I mean by that is, and some of this is all obviously spoken about very extensively and written about very extensively, but one of the things there is that the EB-5 Regional Center Program is up for reauthorization as of September of 2027. Um, any petitions that are filed, you won't be able to file a petition after that date anyway, but if any petitions that are filed before that date are going to be divided into two classes, petitions filed before September 30, 2026, which will have the benefit of the current environment, and petitions that are filed after September 30, 2026, but before September 30, 2027, which you can file, but they might not adjudicate until the reauthorization takes place. Um, Not to say that reauthorization is guaranteed not to happen. Of course, hopefully it'll happen and things will continue to flow smoothly. But another thing that's another little widget that's in play there is the fact that as of the 1st of January 2027, under the terms of the Reform and Integrity Act, the administration is required to reevaluate and adjust the investment amount for EB-5 investors. And so think of it as a negotiation between investors, legislators, administrators. Everyone's just having this conversation without letting it be an open conversation about what should the investment amount be. Should we allow this program to continue? And without getting into the fact that, the Trump gold card is only partially enforced at this point. Um, let's just talk about the fact that should it be enforced or should it come into play, the amount, first of all, it's not an investment, it's a gift. So maybe it gets disqualified for most EB-5 investors. But the fact that the minimum investment amount is $1 million kind of tells me that there's perhaps a negotiation that's going to happen around what the minimum EB-5 investment should be. Should it be adjusted to 1.2 million? Should it be adjusted to something more than that?
So the numbers are definitely going to be changing then, more than likely.
Well, if I would pose a question to you. Has there been inflation since the last time the EB-5 numbers were changed? And the
Absolutely.
answer is yes. So I would say that we would definitely see some increase. What that amount of increase is, that's at this point anyone's guess. But grandfathering is critical in that context.
Thank you, Dibbage. I know that's been also a posing question with a lot of our investors is a concern about grandfathering and how to structure. Thank you so much for everything you shared with us right now. We're going to move on to Mr. Harmon, Mark, and we'll circle back and just kind of have a conversation amongst us all. And then please, if there's questions from our audience, we'd love to hear from you as well. Mr. Mark Harmon, I am a fan of your design of your work. Fabulous buildings. Thank you so much for being with us. And just a few questions that I know have always been a topic of conversation with a lot of the investors in our market today. And I think people would want to know why structure EB-5 as a senior loan of equity? A senior loan instead of equity. Sorry, senior loan instead of equity.
Yes, and Divish touched on a couple of key points, but for us, the critical issue is really security. And in our case, the security is with the land and it's structured as a construction loan that's in every material respect the same as that you find if you're working with a bank. So with Bank of America or Citibank or any of the major lending institutions out there, the same safeguards, the same procedures for making a draw payment under that loan. So every invoice is scrutinized, it's judged against the budget, it's approved by an engineer who's a third-party consultant that's hired to be an independent consultant and expert on whether this construction and the invoices actually should be paid. So there are any number of safeguards that exist within a construction loan that you would not find in a similar situation with just equity, because equity stands behind the construction loan. It doesn't, once equity is drawn and paid for, that then you move into the construction phase. Now, with a construction loan, there is also the fact that the equity is at risk before the construction loan. So if there is a downside situation, the construction loan is absolutely in the number one position, ahead of the equity. And in our case, on a project that's, there's a substantial amount of equity that exists in the project at Waldorf Astoria, Texas Hill Country, that is subordinate to the construction loan. And for all those reasons, I think it's a very favorable way to proceed with an EB-5 program.
So who would take the first loss in these in your projects?
Well, the first loss would be the equity holders.
The equity holders.
Yes.
How would you say that we can ensure alignment between the developer risk and the investor protection?
Well, that's a great question. I think that the balance is that the developer is on the hook, and the developer and the general contractor are working to make the project perform. The general contractor is going to have a performance bond, which has to do with their ability to meet the payments to their subcontractors and complete the project. The developer also is, to some extent, absolutely on the hook to make sure that the payments, that those payments are made, and the equity is spent before the construction loan is made. So the other factor, really is that in these projects, we have in Texas Hill Country, our project, we also have a residential real estate component to the project. So we're not just building the resort, there's also real estate for sale. And that real estate has substantial value. And as the real estate is sold, and in fact, we've sold quite a few lots pre-sale in a situation where we're just starting construction of the project, we already had a number of buyers come up and buy the real estate. And a certain amount of the proceeds from those real estate sales is going to secure the payments of the construction loan for the project. So this is a different situation than many situations you find where it's just the resort that's being built. In other words, we have not only the resort and the operator, which is Waldorf Astoria, and it's owned by Hilton. one of the world's largest management companies, publicly traded, one of the top management companies in the world. And they're going to operate and perform under the hotel. They've got proven track record of success. They have 35 properties around the world. And as we know, Hilton, I believe, is the most valuable or the second most valuable hotel company in the world. But the real estate there is quite in demand and is going to be another aspect that secures both the performance of the hotel and the repayment of the EB-5 construction loan, as well as the performance of the hotel.
This is that leads into a question that I personally, because I'm in the area in Fredericksburg, and one of the things that came to my mind when I heard about the project is why rural? Like, why Fredericksburg? What would make the project be reviewed and looked at to say this is the place to put this astounding resort in?
Yeah, well, first of all, Texas Hill Country is a beautiful area. It's, I think, in my opinion, one of the most stunning areas in the country. It is the second most visited wine country now in the United States. It's the second most popular girls' getaway behind Nashville, California, and Nashville, Tennessee. And in addition, it's surrounded by four of the largest cities in the country: Dallas, Houston, Austin, and San Antonio. And those properties, those cities comprise 31 million people who are within driving distance to Texas Hill Country. And this is one of their favorite destinations. So you'll often see rural projects that are in areas like a ski resort in Montana. Now that's great, but how many people are within driving distance to a ski resort in Montana? They've all got to fly in. There's probably several 100,000 people that live within proximity that can drive there, but most of the people coming to stay at that hotel or buying real estate are flying in and coming from out of state. Whereas in Texas, just the drive-to market alone is 31 million people. So it's a very unusual situation for that to be called rural. You would think that sounds very urban, but under the characteristics and this classification of the EB-5, this is a rural designation, which allows that fast track process and the lower investment amount for EB-5.
Mm-hmm. Beautiful. Now, David, what would you say, or can you share with us what your view is on the legal standpoint of investing in a rural location as the Waldorf Astoria is? Rural and
Yep,
TEA.
yep. Happy to share. In my opinion, particularly if you're an individual who was born in India or China, um, rural or TEA is the way to go at this stage, from a purely legal standpoint. So I'm not saying that you have to invest in that. And to be frank, a lot of my clients come to me and they have, as I said, they have the entrepreneurial mindset and they only want to go with their entrepreneurial project. They don't care whether it's rural or not. They don't care whether it's TEA or not. And I respect that. But it's a commercial decision that you're making there. It's not just a legal decision. Because what you're doing is that you're positioning yourself, particularly if you were born in one of those two countries, you're positioning yourself for a scenario where your case might take 6 years as a minimum to be adjudicated, and you may think right now that you're okay with that, but trust me, 3 years in, when you don't know whether you've got enough skin in the game, whether you're going to be able to demonstrate sufficiently for the agency that your petition is approvable, that your application should be approved, your lookout to it will change. And from my perspective as your counsel, I would say it's great for me because I have to do more work, of course. But at the end of the day, I am more than happy to go to federal court and try to mandate that the federal government makes a decision in your case. But I mean, it's not the most cost-effective way for you to do it. So yes, if you have a project that takes away these pain factors from you, then sure, do it. But very often, I think it turns into a discussion between or a balancing between do you want to figure or do you want to do you value more the returns on your $800,000 investment which might churn 6-7% in a regular, if you even just put it in a regular banking account, situation where you invested in the stock market, 6-7%, I would say is fair, right? In the context of a regional center, you may not get the same types of returns, and in the context of a direct investment or an investment that you make into a not rural or TEA area, you might see considerably higher returns. But is that what you want? Is do you want the returns at the end of the day, or at the end of the day, is your priority to get the green card squared away as quickly as possible? And some clients answer it one way, some clients answer it the other way.
Mm.
Mhm.
Yes, we see, yeah, I was going to say we comment on that because we do see a lot of that when we're uh, speaking with investors, and mm, it's a competitive industry,
Mhm.
and there's a lot of projects out there to be reviewed. Um, but I think a lot of times it is viewed more as I'm making an investment, right? Well, if you're going to make an investment and you're doing it for the return, we agree that it's not necessarily the EB-5 process that should be what you're looking at to invest in, right? Rather than the focal point should be your due diligence in your immigration process and being able to receive that green card at the end of the day. Now, David,
Mhm.
sorry, you had posed a question for us to discuss.
Well, yeah, happy to get into it. So what
Appreciate
I
that.
think the core of this discussion is that there's clearly a trade-off between immigration objectives, collateral, and exit timing, right? And the way I like to approach it is I obviously don't want to give priority or preference to any one project. And so I generally advise my clients to see what is your immigration objective and to what extent is capital protection aligned with that immigration objective. Um, because at some point you need to realize that those two will disassociate with each other, and you need to kind of identify specifically what that point is. And I think, in my opinion, a reasonable investor wants a project that is structured well enough to support the EB-5 petition and its approval, but also wants a position, a commercial position that maximizes recovery in a worst case scenario if the project struggles, right? And again, at the end of the day, every project is open to market forces. So those goals will very often, in my opinion, overlap. The second point, and I'm happy to hear Mark's opinion on this,
Hmm.
particularly in the context of Texas Hill Country, and I see the merits here. So I will look to Mark to address those in some more detail. Um, Secondly, I think that your position in collateral really matters. And this is something that Mark has touched on as well. Because what happens when things do not go as planned is if the project is performing well, everything's good, right? Your priority lenders, you're good. No worries. But what happens in a scenario where things don't go entirely to plan? Your delivery or completion of construction doesn't happen on schedule. What happens if you end up going over budget as a project? And then that can really, I think the tension really starts to kick in when exit timing is discussed, because immigration timelines and business timelines are really different from each other, right? Immigration timelines are kind of set in stone, but an investor might want a shorter, a more predictable exit from the project. And to what extent is the project going to be able to support and deliver that?
Mhm. Yeah, one thing I'd like to touch on is our experience with developing this type of project. So over the last 25 years, in my experience, we've done about 20 resorts from the ground up, and there's probably in total well over $1.5 billion in resort real estate that we've built over that period of time. It's a complicated process. It takes a lot of moving parts to come together on design, on construction, and sponsorship from a great brand like Waldorf Astoria. So we put together really, I think, a fantastic team, proven designers, proven operator, and a proven executive team that's worked together on a variety of different projects and working in a very favorable environment in Texas. We have all of our approvals in place. We have a very, very friendly environment there for doing business, which is wonderful. Texas is a great place to do business, and I know that well because I developed a number of properties in California, which is a different environment altogether. And we certainly appreciate that we've had a warm welcome there and have all our approvals in place and are moving forward. So it's important, as you say, from the investor's perspective to look at from a due diligence perspective. Okay, where's the sponsorship? What's the experience level of the team that's taking this forward? And have they done this before? Has been successful. And that those are important questions to ask.
Yeah, so I think the way I appreciate you answering it that candidly, Mark, because the way I like to give my clients like a list of 8 questions that they really need to run past every single project that they consider. And I would say that, I won't get into each and every one of the questions, but every question has sub-questions to it. But I would say, obviously, the first question is priority of repayment. Second question is the collateral meaningful? Are the security rights, in fact, enforceable in the way that they're expected to be? What is the maturity and extension discipline, which is exactly to the history of the regional center that you're investing with, and the people who are leading the project? How often do they deliver and how quickly? And how disciplined are they with sticking to what they've said? The fourth is reporting protections, cash sweep, reserve protections. Um, Fifth, limitations on additional debt, changes to the capital stack, if any. Uh, what are the covenants, sixth covenants and triggers that can cause one of those features to come in? And particularly in the context of a project that is thinking of having several phases to it, in terms of development or several different parts of it. Where do things stand as far as refinance and sale protections are concerned? And then finally, where do things stand as far as intercreditor clarity is concerned? And to what extent does the investor have the ability to answer those? So I think that any EB-5 investor really needs to be testing those 7 or 8 different things for any project that they're considering.
Well said.
And I believe that some projects answer it better and with more clarity, which enables us to work with them a little bit more.
Now, gentlemen, would it be accurate to say that senior secured EB-5 structures significantly reduce downside risk over traditional investments?
Properly structured, I believe that's a good statement. And to Divij's point, what is the nature of the security? Who are the sponsors? What's how much care and attention and detail has been put into the planning and the design and the experience of everybody involved. So yes, I think that's right. Subject to really having done all of the due diligence and really looked at all these issues that you've just addressed.
I would agree with a similar caveat. I think anywhere where you're in a position to be a priority lender is a great position to be in, right? But being a priority lender has to mean something in the context of the transaction that you're getting into, which brings me back to what I said at the start. There's a legal aspect to this, and then there's a commercial relationship that you're making and a financial relationship that you're making. And I think that that second aspect often gets overlooked or not looked at sufficiently. And there are so many various criteria that play into it that might be unique even to the type of investment that you're making or the type of project that you're investing in. That statement would, I mean, the best answer I would give there is typically that it depends, but I generally stay away from saying that because as a lawyer, I feel like I get a lot of flack when I say that.
That's right.
Now, I-956F approval. I know the Waldorf Astoria is an I-956F approved project.
Yes.
What is the take on with the investors, Divij? Why should they invest on a project or look at projects that are I-956 approved versus those that are still in process or are not?
Well, the short answer is how I mean, how much surety do you want that your petition, your 526E petition as the EB-5 investor will be approved? And how much risk are you willing to take on? Because when you make the EB-5 investment, you're essentially telling the federal government that I have either already invested $800,000 of my money into this project, or I'm in the process of investing $800,000 of my money into this project. So if anything goes awry on the 956 on the regional centers certification at any level, and there are 3 or 4 different levels to it, or things get delayed, you're not in a good position. And so some investors who have a higher risk appetite kind of make that a negotiation tactic, right? They might want to start off with a smaller investment amount, but I think anywhere where you have the F approval, just go ahead with it. It gives us, as your counsel, a degree of comfort. It ties the project to certain reporting requirements that they are required to meet under the RIA, and they're guaranteeing that they will meet. And it gives you the clarity of knowing that there is at least some degree of review that's occurred at the EB-5 adjudication office in DC, which is comprised of both financial and economic and legal experts. So it puts you in a position of knowing that someone's vetted this apart from your attorneys.
Right. Anything you want to add to that, Mark? I know the Waldorf Astoria has gone through that whole journey with USCIS.
Yes, I think it's important. That's a check mark that that you've complied.
Now,
But that being said, at the end of the day, I mean, it's not, I do not want to be heard to be saying that having the 956F approved is a good thing and you don't need to do any diligence as an investor. That's not what I'm saying. You still need to
Totally
do
agree.
due diligence, but it's a good to have. I mean, I would say that a lot of my investors or clients want to only look at projects that have the 956F approved.
Mm-hmm. Mm-hmm.
now one of the closing questions that I had in this topic today, because again, it's a recurring question when we're speaking to investors, is how important is it for investors to act before the grandfathering window closes?
Again, hate to answer your question with another question, but I have to ask, how important is it for you to make the investment in a time frame that you have a degree of certainty, right? There's statutory, administrative, judicial precedent around the way things stand right now. There's a lot that's going to be in flux over the next few months, and that flux is inevitably going to raise questions that are going to be both legal, factual, and administrative questions. Um, Anywhere where things become less clear is not a good position to be in, but there's also commercial reality, right? I mean, you are making a crucial investment, even if it's not a huge investment for the individual in the context of their net worth or their capital availability. It is going to be one of the most impactful investments that they make for their personal advancement and that of their family. And so I think it needs to be treated with that level of gravity.
Absolutely.
Only add to that that certainty in a period of uncertainty is a good thing, and that we've been through an unprecedented period of uncertainty in the United States with all of the back and forth that's happening in the legislative and the executive branch. It just is not business as usual, if there ever was such a thing. So certainty would play probably a little more meaningful role today than it has in the past, in my personal opinion.
Absolutely. So I think it's important to understand your position in the capital stack when you see how risk is allocated. When
Mhm.
you align with strong development fundamentals and move from uncertainty to strategy. I think it would be fair to say that your EB-5 investment is not just about the strategic financial aspect, but it's also the timing decision, and then obviously the ultimate goal, which is acquiring that green card.
I would nuance that to say that the ultimate goal is to acquire the green card and exit your investment in a favorable position. So I think that those two things, again, need to be really considered um, very, very carefully when you're deciding which project to work with, right? And so, of course, priority is great, but understand what that priority means in the context of the project that you're investing with. So, ask your EB-5 project or potential EB-5 project the same questions that I have kind of indirectly asked, and Mark has very directly answered, because I mean that's exactly how you go about positioning yourself with the knowledge that enables you to make a decision one way or the other, right? And so that can range from, and it really varies from what's a priority for you as the investor. Is it just having priority over anybody else, or is it some investors come around and say that, look, I don't even want there to be an option for the project to have further capital raises in the future where my priority might change?
Understood. Any closing remarks from either of you today relevant to this topic?
Mark?
You go ahead, please.
Yeah, no, I feel like I'm all talked out.
Well, I appreciate Viz, your very balanced and thoughtful approach to how to analyze a project, and I think that really fundamentally that's great advice that you're giving that really is focusing on all these factors that are really important in looking at a project, and of course. Since I have a substantial amount of my personal capital invested in this project, I ask many of those same questions, not necessarily the same questions about the EB-5 and getting a green card because I am a U.S. citizen, uh, at least for now. And it every project that we do, we undertake a complete analysis of the risk, and whether it's at the very beginning, do we have the right entitlements? Do we have the right to build these things? Do we have the right partners, the right contractor, the right operator? All those things come together. We started this project 4 years ago. And over that period of time, we have spent countless hours putting together what we think is a very solid project, which I am quite confident and feel that we will succeed. So, from my own personal point of view, it's a strong project, and happy to discuss at any further length the various factors that make it a strong project.
And I think that's important there, Mark, because I think you answered another question there by saying I think it's important to ask who are the people who are participating in this project? How much skin do
Mm-hmm.
they have in the game? Right? This
Mm-hmm.
project has a certain brand associated with it, but the brand also has skin in the game. And I think that that tells a story, and
Yeah.
that tells a story of confidence. So I like to hear that.
It does, and just to reiterate that the brand here, the Hilton and the Waldorf Astoria brand, has made and will make a substantial investment in the project, which is called key money in this case. And it's in my experience, the amount of the key money is unprecedented in the many deals that I've done over the last 25 years in it. So I view that as a very strong expression by Hilton that they believe in this project, that it's a very, very much the top priority. When we contacted them about this project and we had it all teed up for them, they were responsive. within 48 hours, we really had a handshake and ready to move forward with a deal. So that was a great expression of confidence from a brand that's going to have to operate this property for the next so many years and operate it successfully.
Wonderful. Well, it has really been a pleasure to have this conversation with both of you today. I take a lot with it with me for my own conversations out here with what I do with EB-5 LA, and we look forward to seeing what happens with Waldorf Astoria as it proceeds and it develops. And David, I look forward to contacting you again.
Okay.
So
well, thank you so
thank
much,
you so
Claudia.
much.
Thank you,
Thank you
David.
so much, gentlemen.
Yeah.
Have a
All
wonderful
right.
day. Thank you,
My
everybody.
pleasure. Thanks.
Bye.
Bye-bye now.